There's no question that mortgage rates today are higher than they were last week, last month, or even last quarter, and even last year, or the year before that. In 2022, there has been an acceleration of mortgage rates. And when I say acceleration, 2022 started basically right at 3%. And today, mortgage rates are basically at 5%. The first quarter of 2022 is not the first time there was a significant increase in mortgage rates. How are these rising mortgage rates going to impact the housing market? Welcome to episode 138 of the Martini Mortgage Podcast. My name is Kevin Martini, and I'm a certified mortgage advisor with the Martini Mortgage Group, which is located in Raleigh, North Carolina. However, I help families in all 100 counties in North Carolina and pretty much in every state in the U.S. too. I'm calling this special episode Rising Mortgage Rates Impact on Housing. Freddie Mac publishes the primary mortgage market survey every week, and they have done it since 1971. At the end of December 2021, the 30-year fixed mortgage per their lender survey was at 3.11%. On March 31st, 2022, their lender survey was at 4.67%. In the first quarter of 2022, the 30-year fixed mortgage rate increased 1.5%. Let me get granular what this means. The average principal and interest payment on a 30-year fixed mortgage has increased about $100 per month per $100,000 borrowed in the first quarter of 2022. Wow! That means a $300,000 mortgage would have had a $300 a month increase in payment in the first quarter. I can understand how one would think that this rise of mortgage rates is going to impact housing negatively. But is it? Will the rise of home loan rates mean a decline in home values in the future? Will mortgage rates rise at this pace forever? And what does this mean for housing? All great questions. Let me tackle the future of mortgage rates. It is my opinion, and the opinion of many industry experts, that home loan rates will move even higher during 2022. I feel the rate of increase, no pun intended, will not be as aggressive as it has been. However, there are many external factors influencing the markets that could negate this statement. Specifically, the Federal Reserve unwinding their balance sheet of $2.7 trillion in mortgage bonds. You see, mortgage rates live in the bond market as a mortgage-backed security. When bond prices rise, yield is lowered. And when yield is lowered, then mortgage rates are lower. Now, when bond prices are lower, yield rises to attract more investors. When yield rises, so does home loan rates in Raleigh, North Carolina, and in every city and state in the U.S. The Federal Reserve purchase of these $2.9 trillion of mortgage bonds started in March 2020. And these purchases continued during the evil pandemic, and this caused historic mortgage rates. It is not if the Fed will sell. It is when the Fed will sell these bonds. When they do, buckle up, folks. The Federal Reserve's decision on short-term interest rates really doesn't impact mortgage rates in the short term. But in the long term, their control of short-term interest rates could temper inflation. And when inflation is under control, that is good for mortgage rates. Woo! I went on a rant for a moment there. Let me get back to the impact on rising rates on home prices. There are 6 times in recent history where mortgage rates moved more than 1%. The average increase in home rates during those 6 periods of time was 1.46%. And the average home price increase was 8%. Historically speaking, rising home rates have a positive impact on home prices. Let me break down the periods of time. Period 1 started in October 1993 and ended in December 1994. During those 14 months, the mortgage rate increased 2.38%. And during that same period, home prices went up 3%. Period 2. Starting in January 1996 and ended in September 1996. During those 8 months, rates increased 1.2% and home prices went up 2%. Period 3 started in October 1998 and went on for 19 months, so ending May 2020. Home values went up 13%. Period 4 started in June 2020. June 2002, and went up for a year. Mortgage rates increased 1.06%, and home values went up 13%. Period 5 started in June 2005 and ended in July 2006. During those 13 months, home loan rates increased 1.8%, and home values went up 7%. And in the 6th period, which started in November 2012, and ended in December 2013, which was 13 months, mortgage rates increased 1.1% and home prices went up 11%. Let me say it again. Recent history has shown an increase in home values when home loan rates have increased by more than 1%. I believe the recent move in home loan rates in 2022 will yield an unprecedented historical increase in home prices, not just because of the increase in mortgage rates, but in addition to the fact we have today low inventory levels of homes for sale. When you see the headlines that say home sales are down, that is because there is not enough roofs available for sale, not because it's not a lack of people wanting to buy a roof. Let me share a Kevin Martini audio nugget with you. 2021 will go down as one of the best years in real estate history. Many people made more money in their home than they did at their job in 2021. Will 2022 be a rinse and repeat of 2021? I think so. With that said, I do not think that home sales will be as high as they were in the past. And this is not because of a lack of demand. It will be because of a lack of supply. I do not believe that home appreciation will continue in 2022, and I do believe it will continue in 2022, but I don't believe it will be at the levels that it was in 2021. Let me say what I said in a different way so there's no misunderstandings to anyone. Home values are forecasted to appreciate this year and beyond, for that matter. In the 5-year forecast, in the April 2022 Raleigh Real Estate Report Card, it is highlighted that the median home price in Raleigh, North Carolina today is $395,673. In 60 months, that median priced home is expected to be over 24% higher, which puts the value at $491,343. So getting micro with Raleigh Real Estate, homes are expected to appreciate over 9% in 2022. Last year in North Carolina, homes appreciated north of 21%. 2022 may not be as strong in appreciation as 2021, but it's still going to be strong. Real estate today represents a very rare opportunity, and it is never too soon or too late to explore your options. You have not missed out, but you need to take steps. pretty darn soon to take advantage because home values are headed upward and so are mortgage rates. If you have questions about what you heard on this episode of the Martini Mortgage Podcast, I am here. If you want trusted advice with a digital mortgage process that offers great rates with certainty, check out my website by going to www.martinimortgagegroup.com. You can find some real-world information there, and you can also securely apply online or book an appointment with me. Be sure to check out the April 2022 Real Estate Report Card, which can be found in the Learning Center at www.martinimortgagegroup.com. Thank you for tuning in, and thank you in advance for sharing this episode with someone you care about that could benefit. My name is Kevin Martini, and this was episode 138, which has been called Rising Mortgage Rates Impact on Housing. Now it's time for the disclaimer. The material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rates dependent upon borrower's credit, collateral, financial history, and program availability at the time of origination. Rates and terms are subject to change without notice. The Martini Mortgage Group at PCL Financials, a division of Celebrity Home Loans and MLS 227765, a branch address of 507 North Blunt Street, North Carolina, 27604. You can contact Certified Mortgage Advisor, that's me, and Producing Branch Manager, that's me, Kevin Martini, and MLS 143962 by calling the branch, and that number is 919-238-4934. For a full list and more license information, please visit www.nmlsconsumeraccess.org or by visiting martinimortgagegroup.com. Equal housing lender.